Now, the tariff papers will all be split up between those who say that tariffs are temporary in their effects and those that say that they are permanent. Investors, please don't be fooled by this. If you are replacing a globalized economic efficient system with a nationalistic system based on random use of tariffs for any purpose at all, but generally disruptive and continuing to be disruptive, then you're replacing a low-cost efficient system with a high-cost system. That'll take years, and the damage will not be temporary.
So let's talk about how to invest around all of this, because there is a realistic expectation that we will see Fed cuts to come that will have global risk asset consequences. David, you've shifted 40% of portfolios into cash and safe haven assets now. So expand on that for me. What does that say about how you view market risk right now?
It probably says that I'm a silly old conservative who believes that the best way to stay wealthy is not to lose your money. And I can see in the equity markets around me the evidence of a great economic ailment. And that ailment is the massive overcommitment of capital to AI by people who are driven by visions of AI or driven by visions of their own ego, which are out of kilter with reality and with returns on investment. So I think because of that, I maintain a high level of exposure to things like, we were talking about it, gold and oil, but also conservative investments like German bunds and currencies like the yen and Japanese capital markets as opposed to US capital markets. So what this portfolio says, which is called a wealth preservation portfolio, as opposed to make yourself a huge amount of money in cryptocurrencies tomorrow morning, what this portfolio says is that the world is in a bubble, but the bubble has gone too far to be economically neutral, and that the bubble cannot be neutralized without severe economic damage, and you should invest to avoid losing your money in that shakeout, which will not be a correction.